Hi, welcome to the new section of accountancy. Today we are going to solve a question from change in profit sharing ratio among partners. Till last class we have discussed all the adjustments related to change in profit sharing ratio among the partners. Now in this problem we are going to see how those adjustments can be accounted. So here is a problem before you. It says that A, B and C are partners sharing profits and losses in the ratio of 5:3:2. They decided to change their profit in equal ratio from 1st April 2020 and their balance sheet says some liabilities and assets. You can pause this video and can write down this question because this same question can be used while solving or while discussing its solution. So along with this balance sheet, there are certain adjustments which says that first adjustment says that value of land and building be increased to rupees 5 lakh and stock be decreased by rupees 20,000. Provision for doubtful debts to be returned back since all debtors are good. Out of the salaries payable, rupees 15,000 was not payable. So out of the salaries payable, 15,000 need not be paid. And outstanding expenses are to be returned back since not payable. Provision for workmen's compensation claim be made for rupees 30,000. Goodwill is valued at rupees 60,000 and the last adjustment says that B was to carry out the work for reconstitution of the firm at a remuneration including expenses of rupees 10,000. Expenses paid by B amounted rupees 4,000. You have to prepare a journal and pass necessary entries in that and prepare ledger accounts. Now we are going to see how to solve this question. See, here is a journal. We have prepared a journal and you can also draw a journal, a long journal, and we will write the journal entries after preparing revaluation account and other ledger accounts. First of all, you have to leave either some space for drawing a journal or can draw a journal, and after that we will proceed with, after leaving this space we will proceed with ledger accounts. First of all, we have to prepare revaluation account. So revaluation account we are preparing here with the heading revaluation account. Inside particulars amount. So now we can come back to the question. It says that first adjustment says that value of land and building increased by rupees 5 lakh. Value of land and building increased to rupees 5 lakh. Earlier there was 4 lakh. So it increased to 5 lakh means how much is the increase? 1 lakh is the increase, where we can write. So it's it can be counted as an income. So it can be credited to revaluation account. So by land and building we will write with the amount 1 lakh because that was the increase. Then says that stock is decreased. Stock decrease. Asset decrease means should be shown on the debit side. So we are writing here to stock. How much is decreased? Decreased by 20,000. You can see the wording. Decreased or increased by means that much is decreased or increased. Decreased or increased to rupees means it is increased or decreased to that much level. So you have to write the difference. Here it is given by. So we are taking that is the difference. So how much? 20,000 is the decrease. Then next adjustment says that provision for doubtful debts to be returned back. Provision for doubtful debts to be returned back. Provision for doubtful debts is a liability. Okay, so that is provided for someone or provided for giving in future. So that's a liability that is to be returned back since all the debtors are good. So you can assume in two ways. Either can be considered as increase in asset because debtors increased. No bad debts, all the debtors are good. So bad debts and treatment, everything you have studied in the last year. So now all the bad debts are Bad debts are not there, debtors are good. Bad debts decrease, liability decrease, or asset increase. Anyway, it can be shown on the credit side. What to write? Provision for doubtful debts. How much? How much was the provision? 25,000 was the provision for doubtful debts. That is written there. Then says, out of the salaries payable, 15,000 was not payable. Salaries payable was there with us 25,000. Out of that, 15,000 need not be paid. That means that liability also decreased. So liability decrease will be shown on the credit side by salaries payable. How much? 15,000 will be written. Then comes next one. Out of the expenses are to be written back. Sorry, outstanding expenses are to be written back being not payable. Outstanding expenses, that liabilities also will not arise. So that liability decreases. We can write here in the income side, outstanding expenses. How much? 20,000. Is it clear? Then next, provision for workmen's compensation claim. Provision for workmen's compensation claim for rupees 30,000. So its treatment we have studied in the last class. You can refer that video once again if you have any doubt. So workmen's compensation reserve 70,000 we had. Now it is, our liability is 40,000. Sorry, liability is 30,000. So how much is the difference? 30,000 is the liability. Remaining how much? 40,000 can be shared among the partners. So the journal entry will be workmen's compensation fund debtor 70,000 to provision for workmen's compensation claim. How much is there? That now 30,000, and remaining will be shared among the partners. So that adjustment we need not take in the revaluation account. Then goodwill is valued at rupees 60,000. Goodwill is given. So what to do? We have to find out the gaining ratio and sacrificing ratio among the partners, and gaining partners should compensate to the sacrificing partners, and that we will classify separately, and that will be shown in the capital account. That means that entry also need not be taken here. Now next comes B was to carry out the revaluation work. B was to constitute or carry out the revaluation work. For that he will get a remuneration of rupees 10,000. For that all the expenses, whatever expenses are there, that he has to meet. So let us see, we can write to B's capital if expense is paid, or if partner meets any liability, that his partner's capital account should be credited that amount. And here in revaluation account we will write to partner's capital how much we are paying. We have to pay 10,000 we have to pay. And given that B's actual expense 4,000. Actual expense of revaluation was 4,000 that he paid out of his pocket. That has no relation with the firm. So need not write that amount anywhere in the books of account. Is it clear? So that 4,000 he paid was his personal expense. He had to carry out all the revaluation work, and for that his remuneration was fixed. So that only has the relation with the firm. So that amount only will write. No need to write his personal expense of 4,000 rupees. So the journal entries to be recorded in the revaluation account, so far it is over. Now we have to find out the total. Total, which side is more? Credit side is more, 1,60,000. And that same amount we will write in the debit side, and we will find out the balance. So balance we will write as partners capital account. To partners capital account, for A, how much? It will be shared in the old ratio, that means 5:3:2. So for A 65,000, B 39,000, and C 26,000. Total profit 1,30,000. Revaluation profit. Is it clear? Then now we are going to see we have goodwill calculation. For that we have to find out sacrificing or gaining ratio. That can be found out first. Calculation of sacrificing or gaining ratio. So gaining ratio and sacrificing ratio we will calculate here. For that old ratio and new ratio we know. What is the sacrificing ratio equation? Old ratio minus new ratio. Then sacrificing share of A, 5 by 10 was older share minus new share 1 by 3. So 15 minus 10 by 30 is equal to 5 by 30. And for B, old ratio 3 by 10, new ratio 1 by 3. So 9 minus 10 by 30, that means he is gaining 1 by 3rd share. 1 by 30 share. And for C, same way, he is also gaining 4 by 30. That means 1 by 30 plus 4 by 30, 5 by 30 is the sacrifice of A. So in that case, we can find out what is the treatment of capital. What is the treatment of goodwill? We are going to see that how the goodwill will be treated. So here, sacrificing partners have to get the money from gaining partners. So that means gaining partners have to compensate the sacrificing partner. Who is the sacrificing partner here? A is the sacrificing partner. He has to get the money. So we can write A can be credited to A's capital. Who will give A's capital? How much is there? 1 by 5 by 30 of 60,000. So 10,000. And B's share is 2,000. B's capital debtor 2,000. C's capital debtor how much? 8,000. Total 10,000 is to be given to A. So this is the journal entry for treatment of goodwill. Is it clear? That means goodwill gaining, sacrificing share of goodwill we have to find out, then that will be shared among the gaining partners in their gaining ratio and will be compensating to the retiring partner, sacrificing partner. Now let us see the capital account of partners. Particulars amount for all the three. We are writing the capital account of all the three together. So A, B and C. Particulars amount here also A, B and C. So capital account, we know that capital account has opening balance. Opening balance is there in the question where it is given liability side. You can see A's capital 4 lakh, B's capital 2,50,000 and C's capital 1,50,000. So by balance draw down A's capital, B's capital and C's capital. Then let us see the balance sheet once again. So salaries payable we have adjusted, outstanding expenses we have adjusted, general reserve. What is the treatment of general reserve? It is the past reserve, so should be shared among the partners. Can be shown here as general reserve debtor to partners capital. So by general reserve, it will be shared among the partners in their old ratio. So 25,000, 15,000 and 10,000. 5:3:2 ratio. Then next, workmen's compensation fund. We have told that after transferring 30,000 rupees to the claim for workmen's compensation, the remaining can be shared among the partners. So remaining how much? 40,000 is there. That 40,000 we will write here. 40,000 workmen's compensation account. So for A 20,000, B 12,000 and for C 8,000. Okay, then next, credit side, all the entries are over. Let us see on the debit side, because in the asset side there is a deferred revenue expenditure. Advertisement suspense account is there, that is equal to sharing of loss. That also we have to show here. All the if there is loss in the asset side, if there is instead of profit, if there is loss, it will be shown on the asset side. So that will be debited to partners capital account. In the same way, if there is any deferred revenue expenditure, that also will be shown here. Okay, any even some prepaid expenses or such type of any of the deferred revenue expenditure also will be shown here. For A, advertisement suspense account, for A 20,000, B 12,000, and C 8,000, total 40,000. Now revaluation, we have got profit that we are writing here by revaluation. Their individual profit we have got, that can be written here. So revaluation account we are writing for profit 65,000, 39,000, and 26,000. Before that, one more journal entry is there. In revaluation account, we have given compensation to B. How much? 10,000 we have given. That also we have to write. Then again, B's capital revaluation account, there is B's capital is there. So here we have calculated goodwill. So goodwill, A has to get from B and C. So in A's capital we can write the journal entry here by B's capital in A's column. That means from B, A has to get 2,000, and from C, A has to get 8,000. So these are the amounts should get from B and C by A, and that amount we have to write here. That means B and C has to pay to A 2,000 and 8,000 each. So all the journal entries in capital account is over. Now we are going to balance the account. You know that credit side is more for all the partners. We can total the amount. Okay, let us write the amount on the debit side and can find out the balance. For A it is 5 lakh, B 3,12,000, and for C 1,78,000. What can be written for that balance? To balance, carry down. That will be the new capital in the firm. New capital of partners in the new firm. Let us see then preparation of balance sheet. We are going to prepare the balance sheet as on 1st April 2019 after change in the profit sharing ratio. So liabilities amount, assets amount. Okay, then first asset we can write, which is given land and building. Land and building, now it is increased. Earlier 4 lakh was there. In revaluation account credit side we have written 1 lakh increase. So 4 lakh plus 1 lakh 5 lakh. Then next we have computer. Computer we will write here. Computer has no change, the same value will be written. Then next comes stock. Stock has decreased. 20,000 decreased and reached to 1,80,000. Then after that, sundry debtors. Sundry debtors, there is no deduction because all the debtors are found good, can be written 3 lakh here. And next, after sundry debtors, we have cash in hand. Cash in hand and cash at bank. Cash at bank has no change. 30,000 will be written. Cash in hand also in the same way. There is no change here also. And in the liability side, sundry creditors. Sundry creditors, we have 50,000. We'll write here the same amount because there is no change in the sundry creditors also. And salaries payable. Salaries payable, we can write 25,000 was there, 15,000 was written off, and remaining 10,000 we will write. Then workman's compensation claim or claim for workman's compensation, that we are writing. How much is the claim now? 30,000 is the claim that we are writing. Okay, so now all the journal entries except capital is over. So capital, we are writing capital accounts of partners. We have got the closing capital in their capital account that we are writing here one by one, and the total capital is 9,90,000, and total balance sheet total in both side 10,80,000. So here is the end, but here we have left one column here for journal entry. So journal entry we have to write one by one. Why we have left journal entry here is that once if you prepare the revaluation account and capital account, you will come to know that how to write the journal entries. So let us write first journal entry here on 2019 April 1. That is the date of this revaluation. We are writing the journal entry. What is the journal entry? For increase in the building debtor, land and building debtor. Then provision for doubtful debts decreased. That also we will write debit side. Then to revaluation. So it shows increase in the value of asset. Here also provision for doubtful debts also we can assume as increase in the value of asset because debtors increases. Land and building increased by 1 lakh rupees. And provision for doubtful debts reduced by 25,000 and the total 1,25,000. So one entry is completed. Then let us see the next one in the same date. So here liabilities are there. Salary payable liability decreased. How much decreased? 15,000 decrease. So salary payable debtor 15,000. And outstanding expenses also decrease, written off. That 20,000 will be written. To revaluation 35,000 we can write. $35,000 will be written. Okay, then its narration being decrease in the value of liabilities. Next journal entry in the same date. So liability decrease. Now we are going to see the decrease in the value of stock. So in revaluation account we have debited stock. We can write here revaluation debtor to stock, decrease in the value of stock. How much is the decrease? 20,000 is the decrease. We are writing here that 20,000 and narration being decrease in the value of stock. Then next, in the same date, there is revaluation expense paid to B. So revaluation account debtor to B's capital. how much was the remuneration? 10,000 was that amount, and then narration will be written as being remuneration payable to B. Then next journal entry, the same date. This is for writing the profit sharing. So revaluation account debtor, how much was the profit? Total profit was 1,30,000, and for A it was 65,000, for B it was 39,000, and for C it was 26,000. So being transfer of gain on revaluation in old profit sharing ratio. Then comes the journal entries form for capital account. So in the same date, 2019 April 1st, general reserve is transferred to partners capital. General reserve, the amount was 50,000. General reserve debtor 50,000 to A's capital, 25,000 to B's capital, 15,000, and to C's capital remaining 10,000. So the narration was being transfer of general reserve to partners capital in their old ratio. So the next journal entry is regarding transfer of workmen's compensation fund. Transfer of workmen's compensation reserve we have transferred to both the for solving the claim, and the remaining is transferred to their partners capital account. So we can write the journal entry here. Workmen's compensation reserve debtor we had 70,000. Then workmen's compensation claim 30,000 was there, remaining A's share 20,000, B's share 12,000, and C's share, C's capital we will write 8,000. Being the excess workmen's compensation reserve transferred to old partners capital in their old profit sharing ratio. Then regarding adjustment of goodwill, A's capital debtor, A as the sacrificing partner, A's capital debtor 20,000 to B's capital 10,000, and C's capital, B's capital here we are writing the suspense account. A's capital 20,000, B's capital 12,000, and C's capital 8,000. That means sharing of advertisement suspense account, that is debited to their capital account. So the journal entry, its narration is being transfer of accumulated loss in old profit sharing ratio. And here comes the last journal entry, sharing of goodwill. So B's capital debtor, C's capital debtor to A's capital, because A has to get the money from B and C. B and C has to pay the money 2,000, 8,000 rupees each, and A will get 10,000 rupees. And the narration is being adjustment of goodwill on change in profit sharing ratio. So this is the solution, and this is how to solve the questions related to change in profit sharing ratio. So you can revise that, you have the question with you, and after closing this video you can try to solve the same question once again, and after that you can solve the questions from your reference book. Exercise questions can be solved, and you can ask your doubt if you have. Okay, thank you.